What's up guys, everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, but nonetheless go ahead and get it started. Here first off on the 4-hour chart, mainly want to point out here this more shorter term descending resistance where the precedent was set with these two touch points here. So around February 21st to March 2nd or 3rd. Afterwards there then was the wick rejection here on March 6th. Led Bitcoin from 92.8 all the way down to the current local low around 76.7. Since then, Bitcoin, as you can see here, has been steadily straddling and gradually moving upwards along this orange support. There was this rejection most recently around March 19th, 20th. So far we can see here that Bitcoin has continued to move up, recently finding support along the 50 EMA band. Hopefully, best case scenario, what we're seeing here is the flipping of this EMA band, where we can see going back to here, the band was flipped towards the downside, and ever since then it's just been acting as resistance. We had these two brief moves here above. Again, these were rejections along this more shorter term trend, the resistance that is, whereas now we can see here we're getting a candle close, the prior 4-hour candle close above so. Continuously also locally correlated to this descending resistance here is going to be the 200 estimated moving average. Here, the white line, that's going to be very important, sitting right now at around 87.2, 87.1 roughly. Above that, we see the 800 EMA here, sitting at around 80, 89.2. Even so, afterwards, this longer term resistance here set back at the local high around 108, 109,000, January 20th. The second touch point here around end of January 30th, 31st. So around 108, 106,000 ever since then. As pointed out, this has been the longer term resistance leading into current price action. Getting above that, obviously dependent upon when it's going to happen, will be anywhere from around, let's say 94.2 down to maybe around 92, 93,000. And then obviously upwards more so than that. It's going to be around 97.8 to around 101.2. And then clearly they're going to be around the $108,000 to $109,000 level. If you look here at the RSI, we can see, zooming out, going all the way back to the prior local low here around 59,000, early August 2024. Since then, Bitcoin moved up to 108,000, set this double top here, 108, 109,000, leading into the local low recently around 77, 78,000. You can see here that once we saw at the end of October 2024, the RSI get above the 786 was here when Bitcoin was around 73,000. Had the short-term move, pull back down to the 200 EMA around 67.3. From then onwards, moved up to the 108K value ever since November 11th when Bitcoin hit this purple zone at around 89, 90,000. This is when the stagnation began. Ever since then, Bitcoin's going sideways, then had this recent correction or pullback. We can see that predominantly this range of the 618 here to the 786 has been suppressing the price. More recently, the 618 has been suppressing the price since 109,000 from here in respect to this RSI. So getting above the 618 again will be important, but even more so getting above the, the 702, but even more so the 786, again, similar to this brief move above 786 at the end of October 2024, then ultimately led from the around 69,000 to 108,000. Could very well be seeing a similar situation there where we're going to see this RSI move back up towards the 786 once it finally can close above. So likely correlating, finding confluence with obviously breaking this trend resistance here, the 200, 800 EMA as I mentioned, moving above this black trend resistance here, moving above the orange zone, and then continuing to go higher. If we again, look towards the downside for more potential room. Again, just want to point out this most notable vector zone around 69.5, around 72.7. Moving into the 12-hour, again, we're going to see the similar resistances here that's shown on the 4-hour. We're seeing the price itself sitting. Again, the 50 EMA has been even more so noticeable on this 12-hour chart ever since this local high around 109,000 went below the 50 EMA. Ever since then, you can see it's just been acting as resistance. So where we're finally here, and then looking at that in comparison to the RSI resistance here on the 12-hour chart that I've been pointing out in recent videos. Here again, this has been a resistance since November 11th till now, so been around 133 days. And finally, after reaching this oversold territory here down the range being 25 to 16, 17, again, correlated to each of these vertical lines here, each of these key zones back in the past instances of the prior bull market that led into act as the initiatory point going into the next impulse. So far, this RSI has closed above the resistance here, come down, tested it, and is now moving back above. Again, correlating with the breaking of this shorter term resistance here. So ideally, best case scenario, what we are seeing here is Bitcoin has set this descending double bottom here with the bullish divergence here on the RSI. Again, it's on the stock RSI here. Seeing the stock RSI maintain this upper zone as it is so far, and even going into the future, going to be very important. Again, bullish divergence, MACD, seeing the MACD finally break the 0 point. Next needs to break this green zone, which has been key resistance. Mainly, if you see here, this green zone was the resistance for the entirety of this prior longer term consolidation that led into the move up to 109,000. So that's going to be crucial to break. Again, all this is relatively different vantage points that all converge or find confluence or synonymous with the the estimated moving averages I'm speaking about. Again, these two resistances here for the price. So 0 point, great to see that, but we still need to see it move above this green zone and maintain some movement to some degree above the, again, histogram. There's a bullish divergence, RSI bullish divergence. I've already pointed this out a few times. Just wanted to reiterate that with the new data of the fact of this shorter term resistance here being broken, or at least apparently being broken, and hopefully best case scenario finding support above and moving even further above. But most importantly, again, I cannot stress enough, this resistance here being 133 days of a longer term, maybe pushing towards the extent of the medium term, is very important. The Bollinger Bands are relatively constricted or compressed. Again, there's still movement, or potential rather for movement to the downside here, maybe to revisit this zone once more, maybe even go lower. I'd have to say going lower is probably not too much likely. I'd say rather, if anything, if there's one more pullback, like let's say something along these lines, and then finally move upwards, we probably would see further bullish divergence with respect to the RSI and likely the other indicators as well. If we look here at this weekly chart again, there is the bull market ascending support zone where it was the beginning of the bull market back here in 2022, then in the first longer term consolidation here leading into the second major impulse here, then leading into the end of the second longer term consolidation, again all within this ascending zone, also synonymous with the 50 EMA band here, then moved up to 108, 109,000. Now we're back in this same zone. Also, as I've been pointing out, this slightly ascending RSI support is holding as well. The stock RSI here you can see is quite oversold, relatively in the same state as each of these prior instances back here where we saw these other major moves here towards the upside. The MACD is also the most oversold that it's been since the beginning of the bear market accumulation period, so beginning from around 20.2 thousand here, leading into the second bottom of this double bottom formation here in the form of the type 2M, as I've pointed out many times. So all this is potentially, with hope, shaping up to be quite a good scenario. I believe the if we look here at the RVI, we can also see that there is a hidden bullish divergence with respect to from early September to early March. So price correlation will be here from the $50,000 area to the recent local low of around approximately 80,000. Again, price is ascending here, whereas the RVI is descending, indicative of that mentioned hidden bullish divergence. Again, there still is this vector zone that could be completely fulfilled down to 68.3. And the only vector zones below this, again, this is the weekly chart, so this is going to hold more weight analytically speaking. The only vector zones below that are going to be from 33.9 to 27.3, and then 24.5 to 22.1. So if this is indeed this vector zone here not going to hold, likely the bear market, as many have been speculating, even many have been, I may say so, dogmatically and egotistically claiming as if they absolutely know that the bull market is over. 109,000 was the all-time high, which again, it's not my bias. Could be the state of the reality we live in, but I do not think so. Move into this 2-week chart. I have an inside pitchfork here drawn with respect to the candle close low here, January 2019, the bear market low of phase 1 of cycle 3, up to the true peak all-time high. Also, again, validated by on-chain metrics and data, which I've gone over in prior videos, of around March, April 2021, around 64,000, moving down into the candle close low, end of 2022, around December 19th, roughly, around 15,000. Creates this channel here. We can see support going all the way back to 2017 of June. And then again, obviously here, end of the bear market phase 1. The second, because phase 1 here is going to be of the cycle model that I use here on this channel and that I use as a frame of reference. Here, this massive macro W, which set the precedent for this bull market from the let's kind of find a medium here around, say, around 4.5 thousand to cut through these two lows here up to the $64,000 range. So we have these three here leading into this fourth here, the most recent bear market low, which then set the precedent, then leading into and initiating the current bull run that Bitcoin has seen, which is, as I've been characterizing here, as a 5-stage impulse wave where we have the first move here up to 1, correction down to 2, second move up to 2, correction down to 3, and then now I believe we're seeing the final move leading up to 5 here. I think quite likely to continue to fulfill this rejection uptrend zone that's been met, for this first move, this second move, and then projecting out this third move. It's also relative to the final, which was also correlated to the FTX crash towards around like October, just generally the end of 2022, when Bitcoin had that final move from around 20,000 down to that $15,000-$16,000 area. We can see that Bitcoin is roughly finding support along the 382 here to the 236. So this kind of like pastel purple to this yellow here. The last time around, this 382 also held as support as well. So those are also some pretty notable Fibonacci levels to look towards as well for potential support. Now, as I have this bar fractal pattern here, there could still be, the rest of this still around 6 days, basically, 7 days at this point for the current 2-week candle. We could still see about 4 more weeks, about another month of, just stagnation, sideways action, where the price isn't going to go any lower than the local low around 77.3 or so, just approximately 80K. But we'll still just kind of see some more, as I've said, stagnation, low volatility leading into where it's finally going to, as it's going sideways, finally bottom out and then have this final move here towards the upside, where this ascending resistance zone characterizing this current bull run also finds confluence and coincides with the, let's see, that's the 618 and the 0.5 zone, where depending upon when it tops out, this right here, if it plays out along, at least just somewhat, relatively like this fractal pattern or this bar pattern, It will take it up to anywhere from around approximately 195,000 to around 230,000, which again validates various other points of analyses I've gone over on this channel, such as the historical Fibonacci retracements, applying it to the bear market of the phases, phase 1, phase 2, cycle 2, and cycle 3. Cycle 3 being what we're in, cycle 2 being from the going all the way back to looking here at this period of price. This right here would be cycle 2, whereas again, as I've said, this is phase 1 of cycle 3, all that we're seeing here, and this culmination right here would be the end of phase 1 of cycle 3. Now, if we look down here at this bottom indicator, the open interest money flow index, obviously global liquidity has played an important role in the Bitcoin cycles for many years. At this point, I've brought up in past videos the lag associated with the global liquidity, where Bitcoin will lag behind. Global liquidity will bottom out, start going up. Bitcoin will take a little bit longer to bottom out. I think typically it's been around maybe somewhere around like 70, pushing like 100, maybe, a little over 100 days or so. Then Bitcoin will finally start to find a, it will reunify itself with how the liquidity, globally speaking, is moving. And if we look here at this money flow index, you can see first, I will go all the way back to the end of phase 1, cycle 2. So phase 1 is the super cycles. It's been labeled by the crypto culture, which ended here, end of 2013 in December, when it topped out at around $1,200. And then the bear market of phase 2 began here. And we can see each of these resistances here, this longer term one, which is drawn with the 2 touch points with respect to here, April 1st, 2013, then to November, December 2013. So here we saw these 2 super cycle peaks, which is synonymous to this peak here being the first one, and then this upcoming peak will be the second one. Again, is synonymous with these 2 peaks here. And there was this bearish divergence, which here set the precedent for this bear market. We saw the indicator line here drop down into the oversold or buy territory. Eventually, once it finally broke it here in December 2015, this was right after this accumulation sideways period began. Again, this would be another type 2 bottom, which would be structurally synonymous to the type 2 bottom that I pointed out here on that 2-weekly chart, or rather the weekly chart. And shorter term, you can see this resistance here, which once we saw the indicator line break it right here, was right at the bottom. We move to the current cycle. Again, specifically looking at phase 1, we'll notice again some more trend resistances here. This also here culminated at the end of 2018, early 2019, when the price had this intermediate pump up to the 236, or the median of the inside pitchfork, at around $13,000 during June, summer 2019. And then moved into the second bottom, culminating the double bottom of the phase 1 structure, which also coincided with the March crash associated with the pandemic back in 2020. There's again another longer term we can draw here with respect to the prior, then a phase 2, cycle 2, leading into the range of local highs is set here, leading into the March crash of 2020. Then we saw the break of this leading into June 2020, summer 2020. Bitcoin's hitting here around 9, 10, 11, 12,000, then darts all the way up to 64K. We see this double top. We see a very significant bearish divergence here with respect to SO. Again, just rinsing and repeating here. We're seeing these trend lines, resistances, bear market leading into oversold buy territory. Then this resistance gets flipped right here, right as the bear market's ending. Bitcoin's hit 15, 16,000, starts to move back up to 18, 19, 20, up to 30, then to 25, then up to 75, down to 50, now up to 100, 809, down to best case scenario, ideally approximately 80,000, then a move up to anywhere from around approximately 180K to 230, 250, maybe 300,000 at highest. I don't personally, as I've said many times at this point, I suppose I'm just beating a dead horse. I don't think that it's all too reasonable or likely that Bitcoin will significantly surpass 300,000, such as going towards 400, 500, or even higher. Which the 786 sits, again, it all depends upon when it's going to top out at. So, I mean, the 786 sits at around 260,000 towards the end of this year, would push it towards 300,000. The top of this inside pitchfork sits all the way, around June, July, which is what I'm still thinking. Right now, it's what my bias leans toward for the all-time high. Top of the channel would be 340,000, pushing towards the end of the year would be 370, 80, 90, 400,000. So again, I mean, still possible, but I just personally don't think that's what is a more likely scenario. Now, to culminate all these resistances here on the money flow index, we can see that this resistance here, beginning at the $75,000 local high, end of March 2024. You can see that the indicator line has just been doing nothing but going down, setting lower highs, lower lows, whereas the price, for a time, obviously from 75,000 to 50,000, went down, but then it moved up to 108, 109,000. Now it's gone down to around approximately 80,000. So we're seeing the price in the bigger picture here. Yeah, obviously there's these corrections where it's going down, but ultimately it's going up, whereas the money flow indicator line is going downwards. So that is hinting at some degree, some form of hidden bullish divergence, I would argue for. So as each of these white resistances I've pointed out, going back to the end of phase 1, cycle 2, 2013, leading into 14, 15, 16, 17, until now, this is going to be, I think, crucial. When we start to see the money flow indicator line here break above this, likely, again, is going to be all synonymous with everything I went over on this weekly chart, this 12-hour chart with each of these resistances. The fact we're seeing this RSI 133-day resistance broken. We've seen the historical crucial low zone met here on the RSI, again down to this 4-hour chart, ultimately moving into, to top all of this off, the 12-month chart, which I've already spoken about recently, where you can see going all the way back to 2014, we have the bear market year, and then so it's 0. Then we have 1, 2, 3 years of a bull market, bear market year, 1 year, 1, 2, 3, bull market, 3 years, bear market, 0, 1, 2, 3. Now the only question is whether or not this trend is going to be confirmed. At this point, being an approximately 11-year trend, I think obviously it could be broken. A lot of things are changing within not only the technical analysis space of Bitcoin, but also within the fundamental sphere as well, with the Bitcoin ETFs, with the governmental, especially with America, even going abroad, North America, into all these countries, China, Russia, all the other countries that have adopted Bitcoin reserves or stockpiles. They're accumulating Bitcoin, not just on the individual level as retail buyers or, the rich money, the whales as, more supposed sophisticated retail buyers, but these are collective nations, entities that are on the large scale accumulating large amounts of Bitcoin, which was not a thing, at least not a big thing 4 years ago, definitely not a thing, going back even further, 6, 7, 8 years ago. Now, there's also, again, this ascending resistance going all the way back to the end of cycle 2. Again, so it's going to be the 2017 all-time high of approximately 20,000, where you can see here that it ascends all the way up to where we are currently, with the bottom of it being around 165,000, with the top of it being around 240,000. Again, validating the ranges I've been giving once more broadly, 180,000 to around 200, 230, 250, 300,000 at highest. Again, still definitely room for that move up to maybe 400,000 according to the this 2-weekly chart, the inside pitchfork I went over. But really, that was all that I wanted to go over in this video. I think there is quite a lot of crucial, critical, and important things that are happening and playing out in these charts, really, such as I went over here on this 4-hour and the 12-hour to get that more honed in, focused in picture of what's going on in the in the the microcosm of it all, where you're really going to see these moves more intricately play out and shape out in their earliest moments, leading into what, again, these higher time frames, this weekly, the 2 weekly, most importantly this 12-month chart and the 6-month chart, such as I went over it in the past 2 videos or so, are pointing to the fact that more likely than not, again, it's all probabilities, never absolute certainty, but that more likely than not, factoring in the technical data, the paradigm which we are entering into within the fundamental sphere, such as I've already mentioned, with the adoption globally, governmentally, Bitcoin ETFs, fundamental, the institutions, BlackRock, Vanguard, so on and so forth, entering into this sphere, not just as onlookers who are skeptical, but now as large-scale adopters and buyers into an innovative space that's not just some get-rich-quick scheme, some mundane general market asset that's gonna make you money. It's more than that. Bitcoin is the realist form of not just money, because that simplifies it to something that it's truly and fundamentally not, but it's, I believe, and lots of other people would affirm as well, Bitcoin is not just money, but it's the most truest form of value that thus far in the evolution and progression of human history, economics, finances being within that, being the truest form of value that the human has ever come to face within the collective society that we all partake in. But as I said, again, that was all that I wanted to go over and touch on in this video. As always, none of this is meant to be financial advice, but all that being said and everything gone over, I hope you all enjoyed, and I hope you all have a wonderful day.
Ooh, I'm regretting now.